This is a hawkish Fed. As expected, a 50 basis point move to between 4.25% and 4.5%. But the median dot for the end of 2023 is 5.1%. That implies that rates will go up another 75 basis points. And 7 of the 19 members thought they should go higher than that. Not what global Wall Street is expecting. Supporting that outlook, there is no change in the Fed's statement's promise that ongoing increases in the target range will be appropriate. Rates start to fall in 2024. The median forecast at the end of that year, 4.1%, although there is a lot of division. The forecasts range from a low of 3.1% to a peak of 5.6%. Rates then drop to 3.1% in 2025, although one member still sees rates at 5.6% in 2025. The long-run neutral rate unchanged at 2.5%. The new economic forecast downgrade what is now seen as modest growth as the Fed tiptoes close to saying we will have a recession next year. They raise the outlook for inflation and unemployment. GDP for 2023 is seen at only 0.5 percentage point, down from 1.2% in September. 2024 is trimmed by 0.1 to just 1.6%. Unemployment ends next year at 4.6%. That's 0.2 higher than they had forecast in September. The same for 2024. Inflation remains elevated, the statement says now, with no acknowledgement of yesterday's decrease in the CPI. The Fed uses PCE inflation. The median forecast is that will fall to 3.1% by the end of next year, although that is higher than they saw in September. They saw 2.8%. It drops to 2.5% in 2024, 2.1% in 2025. Core inflation next year falls to 3.5%, up from September's forecast of 3.1%. The decision unanimous. So a much more hawkish Fed, at least coming out of the statement, than we had anticipated.
McKee, thank you, sir.